What's going on, everyone? This is Jordan with Conquer Trading and Investing, and this is our weekly Forex forecast and analysis for the upcoming week of March the 2nd to the 6th. Listen up, everyone. This is probably one of our most important plans for the week ahead because of what's going on in the markets. If you trade carefully right now, if you trade correctly right now, you could actually wind up making your year. I want everyone to really focus in on what's going on. Let's prepare ahead and let's work out the charts to find out what we're going to do for the week ahead. Now, China's had their worst PMI numbers over the weekend since the 2008 crisis. Federal Reserve Chairman Powell late on Friday talked about doing whatever it takes to go ahead and support the markets. There is talk about a possible central bank intervention this weekend. That could possibly play into the cards. It's going to play into our analysis right now. Or they could wait and hold. We don't know what's going to happen. We want to be ready for everything. Let's plan it out together right now. Starting here with the euro US dollar, let's take a look. We all know that ever since we broke this head and shoulders over here, it's been a race down to the support. We bounced into the nearest resistance and then straight lined all the way down. Now, during this period over here, I want you to focus in on it so you know the story. Why this was happening, what you were seeing was an immense amount of foreign flows into the US markets. A lot of European funds were going ahead and investing in the US equities. This was causing dollar strength. It closed the gap. It closed the gap from when the presidential election over in France. And then since then, we stabilized and have bounced off hard. The last few days, the euro has been so tightly correlated to what is going on in the US equities. Again, you're seeing flows out of the US equities and people are bringing home that money, and you're seeing that buying pressure in the euro. I don't know if that correlation is going to stay any further. I don't think it is. Look, I think you're all the way up here towards some pretty important resistance. This resistance over here, market at 1.0995, is pretty strong. And then even further above at 0.11667 is really strong resistance overhead. Even if the Federal Reserve does start cutting rates, even if they get down to zero, rates over in Europe are negative. They'll probably go further negative. And I think that the US economy in a downturn is going to do a lot better than over in the EU. I'm still betting on the dollar. I'm betting on the dollar for structural reasons. This past week, I spent some time unloading longs that I collected on the way down over here. I'm now positioning myself short, and I think it's a good time to look for short positioning on the dollar. If we are seeing any type of liquidity crisis in the time ahead, make sure or be aware that you're going to see some dollar strength. Now, what happens if over the weekend we go ahead and we see some central bank intervention and they go ahead and start printing some free money? Well, then we're going to focus on some risk on pairs. We're going to focus over on the Australian dollar, Japanese yen, and we're going to focus in on gold. That's probably where we'll look to make our gains. Right here, I'm positioning myself and looking to continue to position myself short over here now that we've come pretty far, pretty quickly, retracing this move, and we're hitting an area of resistance. Let's take a look over at the US dollar, Japanese yen. This is really interesting. Why? Because if you see this trend line over here, I have marked. It's a 5-year trend line that was broken. It was broken and price really bursted out of that breakout, came into that nearest resistance, came back down, tested that broken trend line. It was holding us support. And then since we've had the markets all of a sudden pricing in the slowdown of China, of the global supply chains, of the whole global economy, and you're seeing that flight to safety into the Japanese yen. Once we took out this support over here at 10971, once we took that out, I became very bullish on the Japanese yen. Everyone following the live streams was aware of that. We had the line marked ahead of time. We considered this a failed breakout once this level broke, and we got positioned very strongly Japanese yen, and those trades worked out beautiful on Friday. If you're not already involved in the live streams or watching the replays on the channel, go ahead and do subscribe now. Follow those to keep yourself in the flow of the market every day, Monday through Friday, to help build on this analysis. Now, what's going to happen? Well, expect bounce. This is assuming there's no central bank intervention. If there is central bank intervention, we're going to jump on the coattails and ride that wave of printed free money. But right now, assuming that there is no intervention, I'm definitely expecting and looking for a stronger Japanese yen. This is a time where you should be looking to hold on to positions. There are going to be retraces. Those retraces should be sold until the central banks step in. And I'm not talking about just an expected rate cut at the next meeting in March of the FOMC. I'm talking about joint central bank intervention. The Bank of Japan, the Bank of China, the US Federal Reserve, all the central banks, the ECB doing joint intervention. That is going to send risk assets flying. But until then, expect the current strength of the Japanese yen to continue. Look to ride that. Look to get yourself into some position trades. The New Zealand dollar, Japanese yen looks like a good one. We'll look at that later. There's a lot to talk about. Let's keep going. All right, we're looking here now at the pound US dollar. This does not look good here for the pound. Look what's happened. You see the support over here? The support I have over here at 1.2799, call it 1.28. This support has been holding for ever since back in October, right? It is now broken through late on Friday. It's not considered a break because price closed above that support, but this is in jeopardy of breaking down further. You have to watch out over here. If we break down further, there's not a lot in the way to some lower levels. So be on alert if we're going to see some extended dollar strength in this coming week. Again, outside of the central banks jumping in, this does not look good. You could see over here this rounded top. This is a topping pattern over here. Now that we've come in over here and we're taking out that area of support, if on Monday we start trading below there over here, this might be an excellent trade to go ahead and position yourself short. Now, you might prefer to play that against the Japanese yen. Let's look at the British pound, Japanese yen right now. All right, British pound, Japanese yen, you could see the difference over here. This was that big support over here, extended down to here. That was taken out and closed below on Friday. You could see this looks way worse structurally than the pound US dollar. This does not look good. Again, I expect some further Japanese yen weakness outside of any intervention. And if that's the case over here, we got a lot of downside momentum to take us to some lower levels. I think this trend line might be the first area of defense. If you step back over a second, let me draw in a support line over you for anyone who's looking for some lower side levels. You have a support over here at 135. That's a few hundred pips lower. Keep in mind, we are seeing expansion in the markets, okay? We're seeing expansion. What does that mean? Instead of, go ahead and pull up the average true range. You'll see what I'll do this with you right now. Go ahead and pull up the average true range. If you see over here, it shows you right now that the average true range is 126 pips. You could see it over here, 126 pips. That's increasing. It was just a week ago, 100 pips. Now, in this type of market, you might expect to see that continue. Volatility is going to continue to grow. Look to hold on trades longer than you normally would. Look to actually take advantage of this market expansion. Look to profit off of position trades if you're able to get yourself into one, because you might see, I expect you're going to see some extended moves. You want to be able to profit off of that. Right now, the plan is to go ahead and sell any bounces, to sell any retraces, and they will occur. You've seen it on Friday in the US equities. You saw in the last 15 minutes, price bounce about 1.5%. Again, whatever FX pairs you're positioned into, look to hold that initial position and look to add to positions as it falls into your favor and you see any retracements. The only times that you need to rearrange your view will be when they go ahead and actually intervene in the markets. Otherwise, I do expect some further deterioration in the world economy. I expect the coronavirus cases to spread worldwide within the United States, causing further disruption, causing further slowdown. And I don't think the central banks are ready to act. I don't think they're ready to act just yet. Let's keep looking. Let's pause from FX for a moment and look at Bitcoin. Now, everyone is all of a sudden very fearful and bearish on Bitcoin. Take a step back. Look at this two triangles you hear. This triangle you see here, this trend line over here. Now listen, If you're waiting for the next halving cycle to play out, and we're only 2 months away, there's a phenomenal video on this channel explaining the halving cycle and what to expect in the next bull market phase of Bitcoin. I really highly recommend it if you haven't seen that already. If you want to play this safe, all you need to do is wait for a break of this trend line to the upside, okay? Probably somewhere around, whether that's 11,000 or if it winds up being around 10,500, whenever that break, that's the safest place you could get into Bitcoin. Now, we are, as long as you're above this trend line over here, that's extraordinarily bullish. Price should not break 6,500. We already put out a video explaining that and why. What else? There's the line, 6,500. This trend line over here should not break. You should be leaning in to buy Bitcoin, especially right now. Look on the daily with me. This line over here we have at 8,500. It's just light local support, but the one down here at 8,200 is pretty strong. I do expect Bitcoin holds. If it doesn't hold the 8,500, that the bulls do hold 8,200. If you do break below it, okay, follow the price action, not what you expect is going to happen. You have this trend line to lean into. This trend line should definitely hold. There's an area of supply down here as well. So Bitcoin right now is looking for it looks to be a great buying opportunity. It's going to be one of those things when as soon as price rises a little bit, as soon as price breaks above this trend line, everyone's going to wish they were buying Bitcoin down here at 8,500. So definitely take a look at that. Watch those two videos and prepare yourself because we're only a couple of months away from the halving followed by the next Bitcoin bull market phase. While we're taking a look at Bitcoin, let's move over to gold. Gold, you can see, has had a lot of volatility these past 10 days. We had this enormous breakout over here out of this triangle. We played this. We were expecting this. Again, if you're not following the YouTube live streams Monday through Friday, subscribe to the channel now and do watch those live with us or on the replay. We had this breakout, took profit a little bit early, and it peaked out all the way close to $1,700. And then all of a sudden, after it was consolidating, all of a sudden the liquidity crisis is hitting and you're seeing people selling their precious metal positions. Silver was down over 6% on Friday. Gold failed this breakout. This breakout now is considered a failure. This does not look good for gold. Listen, a lot of people think that gold's a flight to safety. Okay, that's fine. This is not a geopolitical event right now. This is a systematic liquidity crisis. People are exiting their equity positions. People are getting margin calls, and people need to go ahead and cover. They're going ahead and they're selling their gold to cover their equity positions. I expect further downside on gold unless we go ahead and have that central bank intervention. At that point, of course, as soon as we start seeing QE announced, get behind gold. If it's just rate cuts, I'm not interested. I'm going to wait. I love gold. I think everyone should hold some physical gold in their portfolio. I think right now, though, there's going to be better opportunities to go ahead and buy gold outside of any intervention. And it makes sense to focus where the opportunity is right now. The opportunity is right now on the Japanese yen. The opportunity is on the Swiss franc. The opportunities against the commodity currencies, against the Australian dollar, against the Canadian dollar. We're going to look at that in a second. And against the New Zealand dollar. Pound and euro are more neutral, so stick with the strength and stick with the weakness. All right, let's take a look at the US dollar, Canadian dollar. And listen, there's a lot of problems in Canada right now, including the price of crude. We'll take a look at that next. But just look at the charts and what the charts are doing. Look at this trend line we had over here, okay? Finally, the dollar broke out against it, and I expect much further dollar strength. Look at this breakout over here, came into that resistance. You can see the resistance playing out over here. Price came back down and held the trend line breakout. And since then, price has been off to the races. This is now a real breakout. I think we could see much higher prices here on the US dollar, Canadian dollar. Right now, the plan is to buy any pullbacks. Look at this over here. This is an area of support. Let me draw it in for you right now. You already pulled back into it on Friday. If this holds and resumes out of here, this is a place to buy. If we do see a further pullback in the dollar, which could absolutely happen after Federal Powell's comments late on Friday, we have another chance into this support back over here and another one over here. Look in uptrends, and we're now broke out over here to the upside. Look in uptrends to buy off of pullbacks into support. It doesn't get easier than that. That needs to be your game plan. Do not try to pick tops. Do not try to sell momentum. What you need to do is look to buy pullbacks into support. Keep it easy. Keep it simple. The charts price everything in. Go ahead and follow them. Let's take a look at crude oil. All right, we are seeing, actually, we're looking over here, WTI Crude Oil. We have this trend line we were following over here. Look what's happened since the break of that trend line. Again, the charts price everything in. So listen, we're really breaking down over here. Once we lost this 49 level over here, 49.50 level, we came back down all the way into the lower support. Right now, it's holding. OPEC is meeting soon. I'm sure they're going to go ahead at this point and probably look to cut production. Saudi Arabia cut production last week. That didn't really do much. You could see oil continues to sell off. Why? Because there's no demand. China's basically shut down. There's simply no demand. There is just no demand, and because of that, oil is actually pricing itself very accordingly. I think that we're going to see the current situation continue to weigh on oil. Right now, this is also a question of looking to sell any pullbacks. If you got a gift, if you got a pullback up into this 49.50 area, or even up higher, right? 52, 54.50. Those are all opportunities to look to sell oil longer term, because listen, it's been 12 years since the last slowdown. It's only a matter of time, and it looks like this could be a black swan event that really turns the economy into a recession. We're already in a fragile position before the coronavirus started taking a foothold worldwide. We could see much lower oil prices. There's no reason to step in to buy oil. It's only a question of going ahead and selling and fading any rallies. We've come off pretty hard and pretty fast. I wouldn't look to sell oil down here. I would wait, sell any bounces. Again, your whole mindset, your whole plan needs to be go ahead to where that strength is and continue to ride that strength until something fundamentally changes. At this point, the only thing that could fundamentally change will be central bank intervention, and I'm not talking about a simple planned rate cut. Let's take a look at the Australian dollar, Japanese yen. I want to focus here because this is considered the ultimate risk on, risk off pair. What does that mean? Risk on, risk off. When everything is looking to be a little bit a rosier outlook, if it looks like there's going to be global growth, traders are willing to go ahead and take on some risk looking for that growth. The Australian dollar is usually the currency that they turn to, and the Japanese yen is the currency that when people are looking for that safe haven that they turn to. So people sell this right now. You could see this being sold as there's huge risk off in the market, right? Now, over here, you could see after the phase one trade deal was signed, actually this year-long trend line was broken. It looked like we were gonna see some global growth. We actually came into resistance, came back, tested that trend line, it held. It looked like we were gonna break to new highs. And since then, things have just gone from one thing to the next. And now they have turned absolutely horrible, taking out these lows over here. This does not look good. This looks very bad. You could see on Friday it was on the verge of really almost collapsing until Powell stepped in, and Powell said that he's going to do whatever it takes, that the Fed is going to be accommodative, and you could see the little bounce. Again, expect bounces. If this weekend, and this is why I want to go ahead and turn your attention to this pair right now, if this weekend we see some type of central bank intervention, do go ahead and buy this pair on Monday, or at least I will be buying this pair on Monday if that were the case, and that's how I would look to play this type of intervention. However, if that doesn't happen, and I don't think it will, definitely do look to continue to sell any rallies on this pair. Because of the Chinese PMI, I do expect that if there's no intervention, that this probably gaps down. This probably comes in and tests the low from Friday, probably takes it out. All right, don't chase after price, but do look to sell rallies. All right, everyone. This is going to be a really busy week. There's so much going on. It's a lot of pieces in motion. The puzzle's really fluid. Do check in with us on Monday. See what's going on either in the live stream. Watch that replay. Stay with us so that you know what's going on. You're able to track it yourself to keep up with the markets. This is absolutely an environment where a lot of money could be made. We're outside of our normal trading strategy. We're looking to actually take advantage of this volatility. So long as you play it smart, so long as you're prepared, which means doing your analysis, which means staying in tune with the market, staying in the flow, you're going to wind up doing very well under these type of circumstances. If you haven't already subscribed to the channel, do go ahead so. If you did enjoy this video, if you gained anything from it, please go ahead and hit that like button. Leave me a comment. I definitely respond to all of them and appreciate them. I hope you all have a great week ahead. I look forward to sharing more with you. That's it, everyone. I'll talk to you later.